Hi, welcome back to Invest Like a Pro. I want to talk about, I'm going to use 4 time frames today, and I am going to go through the analysis, sort of the way I look at things. Now, I do it very, very quickly, but I'm going to take some time and show how I go through sort of the process of analyzing whether there's a trade there or not, and what direction it would be, and then what the trigger would be. And I'm going to start with the monthly chart and work my way down to an hourly. Let's go ahead and get going into this. I think you'll find this useful in terms of sort of kind of how I think. The stock is RCL, Royal Caribbean. And we had this rally, and I'm going to zero in on the monthly chart. So we had this rally after the bear market drop, and we started to move our way up. And I have been saying to clients and such that, this 100 area was a problem. You can see where it sort of acted as support here, but it definitely acted as support here. It acted as support here. It acted as resistance here. And so if I go back and look and say, okay, anytime an area, and it's not an exact price level, but an area act as support and resistance multiple times. And I know it's pretty key. So once we got back up into this area, 100 area, and reversed, and then it rallied back up again, I figured this is a pretty tough area to get through. Now, in conjunction with that, we had a declining 18-month and a declining 40-month. So someone who bought this down at 40, 45, 50, really had made a nice trade, what they would consider to be maybe an investment, buying off the bottom, and had rallied up. To me, that was this area in the 95 to 100 area was a pretty good spot to take some profits. And my reasoning was because the 18-month was still declining. If the 18-month had cupped around and started to show signs that the trend was really starting to reverse and it was going to act as a stronger support level, then I might be inclined to just maybe trim this a little bit if I take any at all and look for more upside. But the way this was playing out was I felt like there was a pretty good test of the 18-month coming. So that's kind of my starting point when I look at this, and this is rallying up here. Now, as this has rallied up to this key level, you start to zero in, just like you would in an uptrend that's getting extended. You would do the same thing on the lower time frame. You're looking for signs that the momentum is starting to slow down. So if we look at the weekly chart, notice how this was making higher highs and higher lows. MACD made a new high here, a new high here, and now we're above the zero line. And then we made another high here with price. And then we had a correction back. And then when this went up to test, look at what happened. You barely got this back above the signal line, and then it quickly dropped back down below with a pretty significant drop in the highs. So this made a significantly lower high relative to the prior. Even though price was making a double top, making a double top here, we were making a pretty significantly lower high in MACD. That is still divergence. The classic divergence is higher high in price and not in a lower high in MACD. But if you make a double top in price and you make a lower high in MACD, I would still say that qualifies on a divergence basis. And also notice as this was rallying back up that the ADX was dropping down and couldn't get back above 25. So those are the types of signs you want to be on the lookout for. So now we know we're at a pretty critical resistance point on the long-term chart, and the weekly chart is starting to show signs of momentum loss. So we also want to look at the weekly chart for where support would come in. So if I'm looking at this and trying to sort of figure out, okay, where is support? First level would have been, here as a support level, and then next would be here. So I'm going to go through and look at these key levels on the weekly to figure out kind of how much room and what makes sense. I'm also going to look at where the MACD is in relation to the zero line, and how long the ADX has been below the zero mark. But these are kind of key levels to be on the lookout for, these prior lows on the weekly chart. And we want to do that before we start looking at a trade on the daily. So now look what took place on the daily chart. So I know on the monthly I've got resistance at 100, and I know on the weekly I'm starting to lose some momentum. Now, what takes place on the daily chart is we get the 18 to cross down below the 40, and then price comes inside really quickly. Now, I know I look at this counter trend play where when the 18 comes down below the 40, I'm looking to get long, but that's only if the weekly chart is showing good momentum characteristics in an uptrend and showing good momentum characteristics. If the momentum is slowing on the weekly and we're hitting into resistance, then I actually want to play this downside crossover because it's going in line with the weekly chart. And I hope this makes sense to you. So I don't want to confuse anyone. I do like to look for an opposing trend on the lower time frame. But in this case, when the momentum is starting to roll, I actually want to play this downside trade. So I've got the break to the downside, the move to the downside, and then the 18 crosses down below the 40, and we come in the zone. Now, notice what's happening on the indicators. The MACD is crossing down below the zero line and forming a little pinch, and then it did it again on this next rally. So we had two back-to-back pinch plays. On this rally up, we won inside the zone where 18 crossed down below the 40 and then the price gapped up inside the zone. That's the one I want to zero in on because we have a little bit more confirmation with the 18 crossing down below the 40, the MACD well below zero. And notice how the red line in DI had crossed over and was holding 25. So we had kind of everything that I'd like to look for. Now, I mean, sometimes I want to see ADX strong, but in a turnaround play where you're going kind of counter trend to the bigger trends, but we're showing momentum signs are starting to reverse to the downside, it's okay if you have a low ADX, but I want to make sure that the red DI is showing signs of reversing as well. So that's confirming what I'm seeing on the MACD, and it's also confirming what I'm seeing in this price. So I want to sort of zero in on this area here and go into the hourly and say, okay, I've rallied up into this zone. What does it look like at that price? And so let's go here. And now that was on July 6th. If we go to July 6th, what we have is a move. So first we had the opposing trend pattern here, and then we had a gap down. But this was too early on the daily. And then we came down, and then we rallied up, and we got another opposing trend pattern to develop. And in this case, we had a gap up, and by the end of the first hourly bar, we closed below both. Notice the zero line reversal pattern, and also notice that even though we rallied up, green couldn't get the ADX to cross above 25. So green had moved up, but the ADX was still a lot lower than the red to the downside. So I've got kind of the confirmation I'm looking for, and the trigger on the hourly would be taking out, it really could be on the close of this bar here, this big reversal bar, or taking out the low of that bar and putting a stop at the high of the day. Now, if I'm going to do that and I want to play this, I got to be kind of careful because I know if I'm playing the hourly for a swing trade, it can be difficult because we have gap up and gap downs, and it can be I think you can take on a lot more risk. So a trade to consider here is to play the options in this scenario. If I'm going to go down to the hourly off the daily chart. So I know I've got the daily. I know I've got a trade on the weekly. It's not necessarily a full-fledged downtrend on the weekly. I know I'm coming up against some support. It could be the support at 76 or 77, or it could be a more likely level, down in this mid-60 area. Then I can play the options off the trigger on the hourly. And I'm taking advantage of the lower time frame to get me in at a timely manner, which you need to do if you're going to play options. It needs to be timely. You can't just put options on and hope for the best. You have to be good at not only picking the right trade and having a good pattern on your hands and a high probability trade, but you also have to have good timing. And that's why I would go down to the hourly. And I think I like playing these hourly trades off the options and, giving them anywhere from a month. You probably don't need more than a month on most of these trades. But you can play these out of the monies. Where you're playing it, let's say when the stock's at 85, you're buying, say, the ones that are 75s. It could be the 80s, but they might be a little expensive. Or looking at the 75s, and they're out of the money, and you're kind of looking for them to get in the money by the time you get out. And so you get a pretty good bang for your buck when that happens. So I hope this makes sense. I want to start with the higher time frame, look at where the location is and where the problem areas are and what my downside objective is. A lot of times will be one of these major moving average. So the downside objective here has been met because we've come down to the 18-month line. And that's more in line with this support line here in the mid-60s. So I've kind of got that combination. But I want to do the trade in the mid-80s where the trend on the daily is starting to kick in with DI and MACD, and I've got the moving average crossover to the downside, and then I get my entry off the hourly. So let me know if you have any questions or comments on this, but start with the higher time frame, work your way down, look for momentum shifts, then go down and look for your setups. On a lot of times it'll be on the daily chart, and then your trigger will be on the hourly. That's how I use all 4 time frames together. Again, let me know if I have any questions or comments, and we'll see you next time.